Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, after a turbulent short week due to the market close for the Easter, the Australian dollar has succumbed to further weakness and now holds above the key support level of 64.80 as the dollar index, which measures the greenback strength against a basket of six major currencies, surges to 105 figure. In last week's economic data, the surge came through after the positive news in the US manufacturing sector. The Institute for Supply Management, the ISM, reported growth in March, ending to a 16-month of contraction. Despite this, factory employment remained subdued and input prices rose. In other data, the Fed's preferred inflation gauge, the personal consumption expenditures, the PCE price index, rose to 0.3% in February, matching the forecast with the previous release at 0.5%. Despite this, many still anticipate a potential June Fed rate cut to stimulate economic growth and therefore could see the dollar plummet. In the recent views I hold for the US dollar, I feel the market has now reached the top side of its range, so possibly time for a correction. And if so, could see the US dollar plummet back towards 103 from where it currently holds at 105. This will see the support holding around 64.80 and look back towards the top side of the 60-day simple moving average, now lower from 66 cents to 65.65 to 65.80. Reassess from this level as we could see a further gain as we look to the broader aspect of 67 to 68 cents. The euro also tumbled heavily on Friday and Monday and now close towards the bottom side of its range around 107.1025. I do anticipate the market should find demand here, as we can see back in November 2023 and also in February 2024. Demand re-established a trend and most probably could do so again. So therefore I'm not going to get negative in case we see a bounce from this region back up towards the level around 109. This week there is a blockbuster events with most of the economic data out of the US, with the main attraction viewing the non-farm payrolls on Friday. The dollar yen still continues to lurk around that top side of the level, which could possibly see the Bank of Japan intervene. This is levels that were last recorded 32 years ago, when the market from around 152 plummeted. Meanwhile, Finance Minister stated last week that they wouldn't rule out measures against excessive currency movement, emphasizing the need to address rapid yen fluctuations. So therefore we could see a rejection from 151.80 and look back towards 149. Follow the recent data out of the US, we can see that the market for the sterling has plummeted further and heading closer to the bottom side of the range around 124.80. I do anticipate the bulls, like previously seen in November, could step in and see a rebound back towards the region of 128. The price action for gold continues to extend and now clearing the 2,200 figure 14 area leaves me neutral. The reason behind that is there is some bearish divergence, so we could see a snap of this bull trend and see a pullback anywhere as low as 2,200. Viewing the top side, I have no view. Oil exceeding the $83 mark now puts me also in a neutral view. However, profit taking may come back due to the divergence here and therefore see a pullback anywhere as low as 81.30.45 to 79.80.90. Viewing the top side, as I mentioned, I remain neutral. Well, that's a wrap. Thank you for joining me, and as always, look out for the intraday report and hope you enjoy the great start to the new week.